Interest rates have gone up on almost every financial product throughout 2022, from mortgages and loans to checking accounts and savings accounts. However, there's a product that you might be overlooking, and that's certificates of deposit. These accounts have seen tremendous growth throughout 2022, and there's a good chance that interest rates will continue to rise on CDs throughout 2023 as well. Today, we have Spencer Tierney, the CD expert on the banking team at NerdWallet, joining us to talk about what CDs are and why they might be a good option for you. So Spencer, what are some of the main benefits of opening a certificate of deposit, especially right now?
Yeah, so the biggest thing is the rate. And we're seeing rate increases that are honestly very historical. We haven't seen these kind of rate increases in at least a few years, if not a decade or so. And so the best CD rates are around like maybe 3 to 4% right now, compared to 1% in the beginning of the year. And this is mainly at online banks and credit unions. So the rate of return, it's guaranteed, it's a fixed rate, and it's federally insured, just like another bank account would.
Great. So it sounds like interest rates being high is one of the best draws for it right now as compared to over the past few years.
Yeah, during the pandemic, the early part of the pandemic, we really saw that rates were very low to very, very low. Basically lower than 1% for sure for the best, and very close to zero in some cases for the national averages. And in this last year, we've seen the Federal Reserve actually raise their benchmark rate, which only affects CDs in that banks kind of like take their cue that once the Fed benchmark rate goes up, then their savings rates also go up.
So besides a high interest rate, what are some of the great benefits of opening a certificate of deposit?
Yeah, so this isn't your everyday savings account. A CD is specific to a few use cases. I'd say maybe 3. So one, it's a low risk investment vehicle. Basically, you don't have the stock market risk, no volatility in the value. What you put in is what you're going to get out plus interest, and you can predict that interest because it is that fixed rate. And now second, it's a hands-off account. So we're looking at an account that you can't withdraw or add any money over time, except in a few exceptions. And because of this, let's say you have a windfall, or you have, what have you, like inheritance or some big amount of money that just comes your way that's unexpected, and you don't know what to do about it, and you want to keep it protected for a little bit of time before you make a decision, then a CD could be the way to go. And then third is basically thinking through a planned future purchase in a few years. So let's say you're very organized, you know exactly the kind of like savings plans you have. Maybe it's a home down payment in a few years or a car, and you would basically protect the savings, not add to it, just protect it at a high rate over time.
So it sounds like you have something that has a guaranteed return as long as you're willing to play by the rules of not touching it for a little while. And you can get a bit more of a response for interest than you would from, say, investing in the stock market. But you might have a trade-off of perhaps less of a return than you could in a good stock market.
Yeah, so that kind of gets into the downsides maybe a little bit, if you want to go there. And I think you mentioned the penalty. So that you can't get money in or out. So if you do withdrawal, there is that penalty. And it can be like a few months worth of interest to a year's worth of interest, depending on the CD term and other things like that. Penalty also varies by bank and credit union. And the other thing is, yes, you're right that this isn't the best return you can get. It's the best possibly guaranteed return, but even then, there might be some exceptions. You're looking at treasuries or I-bonds, or there are other investment vehicles that are also low risk, like a CD. But just remember that it might be easier to consider a CD, especially at a bank or credit union where you're opening it just like any other bank account. So there's no like investment lingo you need to know to go for this. But right, you're not getting the best rate out there possible. It is one of probably the better fixed rates you can get. And you maybe not be able to compete with inflation all the way. It might help you in your quest to protect your money against inflation, for sure. But in a high inflation rate environment like we're in, well, there's just no promises.
Yeah, it makes sense. I mean, there's no real product out there that isn't subject to the changing environments of the macro economy, right? But so let's maybe take a step back and sort of talk about what exactly a CD is and how it does compare to other kinds of banks accounts.
When we think about checking accounts and savings accounts, it's almost like we don't really have to explain that one's for spending and one's for saving. A CD is a little bit more complex in that it is kind of like a locked box savings account. So you put the money in like one lump sum and then the account gets locked, and you get to set the amount of time it's locked for. So that's your CD term. Generally, the standard terms are about 3 months to 5 years, but the extremes are 1 month to 10 years. But in general, you'd probably want to go for a few years, maybe, and shorter term could be better. So it really depends on what your savings goals are. And then, you're just basically waiting for that money to grow in interest. And a bank or credit union, that means compounding interest, which is definitely a really helpful aspect. And then the other thing is that if you do need that money early, there's only like one type of CD called a no penalty CD that is that exception. But for most CDs, if you withdraw early, you're going to have a penalty, and that penalty is going to like dip into the interest that you've earned, but also it could be interest you might have earned, as well as possibly even the principal, which is the amount that you put in initially. So it really depends on the bank and credit union, but that is something to be aware of.
For those penalties, what do banks typically charge for that? Is it usually just kind of a fixed amount, or is it maybe a percentage of what you have put into the CD?
Yeah, that's a good question. So we'd probably be more inclined to think about like a monthly fee at a checking account, which is fixed, or say, that's usually the general way we think about that, or a foreign transaction fee, which is a percentage. But in this case, it's actually a little bit different for a CD penalty in that it's a amount of interest that usually has been earned. So could be 3 months worth of interest that's already been made in that account, or 6 months, 1 year, or even longer. And it basically will just dip into what you've earned, which is, a bit sad. And it's one of the only savings accounts that has that kind of penalty, but it does do its job effectively of preventing you from getting that money early.
Got it. So from the bank's perspective, is the reasoning behind that so that the bank knows that's a guaranteed pool of money that they can draw from to potentially give out loans to other people? Or what's kind of the objective behind having a penalty for withdrawal?
Yeah, you're right on the mark. It's basically a guaranteed deposit for the bank. So the banks, as you mentioned, are using your deposits from all these different cash accounts that go towards their loans. And in this kind of environment where loans are a little bit more expensive, they would definitely want to just keep on having the supply of deposits available for them to keep on making loans.
Banks are, kind of trying to tackle inflation in the same way that, like consumers are trying to tackle it as well. Like we're all trying to earn more money on our money, but banks are trying to incentivize customers to stay with them and offering them interest as a result, but they also want to loan out money and earn more interest for themselves, right?
Yeah, exactly. This rising rate environment that we're in is really a good time for savers. We are seeing like the banks are basically competing among themselves. So remember that we're not talking about all banks. Like the national average is still below 1% across different terms. But for the best CD rates, which are usually at online banks and online credit unions, we are seeing them compete with each other for those deposits in a very like appealing and eye-popping way. I mean, 4% CD, 1-year CD rates are possible right now. And we're probably not gonna, I don't know how long that will last, right? I mean, the Fed will keep on raising its benchmark rate a little bit, maybe, we don't know. It really kind of depends on where inflation is next year, and things will go from there. But in the meantime, we are at a point where we can put our money towards CDs if they make sense based on savings goals, because that withdrawal inaccessibility is really a thing. So yeah, all that to say, it's a good time for CDs, but it should work for your goals.
Right. Yeah, it definitely sounds like that's an advantage, that you have a rate of return that's locked in no matter what the economy is going to be doing over the course of your term.
Capturing a specific rate in time is something where there's a risk that there's opportunity risk. The rates might go up, especially in a rising rate environment. So you will miss out on, you could have put a CD in, a month later, which now has a higher rate. So it's one of those things where you just have to like remember what the money is going to be for and not try to chase rates too much, and just remember that there might be some opportunity costs with not missing the next few months of higher rates that might be there, but might also not be. And finally, that just the CDs themselves are, they're a very straightforward tool, and they're not as complex as, say, a brokerage account, which has a lot more assets that you can deal with.
CDs can be a great tool for saving and earning some interest, especially if you have some extra cash sitting around that you don't mind locking up for a while. They can also be a great addition to a traditional savings account or just another part of your overall financial puzzle. We have another video coming out soon explaining the different types of CDs, how they work, and how you can open one. I'm Chanel Bissett, and I'm a banking writer with NerdWallet. If you're interested in opening a CD, head over to our website to check out the many reviews and roundups that we have about CDs. And if you feel like you learned something in this video, like and subscribe.